Welcome to the Tuesday later than normal Tuesday evening financial thing. Stocks and crypto live stream. We have a lot to talk about today. Let me take these headphones out. A lot to talk about. But I hope you're doing well. Hope everything is well in your world. We have a new crypto miner behind. Which way? That way, right there. Haven't opened it yet, but you can see the aware element too in the background. Big developments on that. I'm not really going to talk about that today, but that's been a bit of a mess. Anybody that owns one of those out there. But thank you for joining the stream. Please hit that thumbs up if you can. Helps notify other people that we're broadcasting live today. We'll be back as usual time, 7:30 p.m. on Thursday for the peer-to-peer lending live stream. But today we're an hour late. Had to go to the account to file taxes today. Yay! In the US, you have to do that on the 18th, by the 18th of April. Get to do that in the UK, of course, by the end of December. But got a lot to talk about. Inflation. Had new inflation numbers come out today in the USA. And we're going to be looking at the UK inflation, see what the hell is going on and why I think that this bull run in the stock market could be coming to an end soon. I mean, we all know it's going to come to an end at some point, but everything right now is pointing to an ending to this incredible run that we've had in the stock market. So we're going to talk about why that is happening, what's going on with the inflation numbers, just how expensive things have gotten. And we're looking at a trade that, if anybody was following, I think it was it last week, a couple of weeks ago, maybe last week, the bicycle therapeutics trade, which had a big dump and then a huge pump and then a big dump. So did that in the trading 212 portfolio. Didn't make out quite how I thought it was going to go, but still came out in the green. And we're going to be doing another trade on a coal company, which could well be maybe one of the last trades that happens with that kind of aggressive action within energy, because just really not sure what's going to happen at this point. Welcome to everybody. Let's say a quick hello. Patty is here. Jeff from France. Paul, bit late tonight, yes. But it gives all of those people who get here late a chance to be late and still be early. Because if you're not early, you're late. Invest22 is here from London time. Mike Powell, Southampton. Paul Bagworth. Hi to you, Paul Bagworth. Mark Mason's here. Peter Vince in Leatherhead, where the weather is improving. Glad to hear that. For anybody else who's joining us in the future, welcome. If you want to tune in live, we do this Tuesday, Thursday evenings at 7:30 UK time and 2:30 p.m. US Eastern time. Let's get right into it. See what's going on out there in the world. Hang on, let me pull this up. Not quit this out, as I have done in the past. DailyMail.com reporting that Bank of America analyst, which, by the way, if you don't know what the Bank of America is, it's one of the largest banks in the US of A. It's huge. But the analyst has warned clients that a recession shock is on the horizon days after Deutsche Bank forecasts the economic downturn for 2023 due to Federal Reserve's attempt to tame surging inflation. And if we look at the inflation numbers today, see if we have them in the US. And again, I always use the US as a barometer for the rest of the world. But we had an inflation report today of an 8.5% rate for March versus a year before. So everything is in the CPI, the Consumer Price Index, which doesn't include everything, but includes some of the things that we use most. and it's 8.5% higher than last year. So imagine everything is costing 8.5% more. Obviously, some things a lot more, as we see in the UK with energy prices going through the roof. Over in the US, gasoline, petrol prices going very, very high. You see the rate here, we are at a high point, the highest point since, I believe, 1981, which is crazy. And this thing has just gone rampant. Consumer prices rose 8.5% in the US in the year through March. So year on year, reaching the fastest inflation rate since 1981. Rapid price increases have been exacerbated by the recent surge in gas costs tied to the Russian conflict in the Ukraine. Fuel prices in the US have jumped significantly. Gas is not the only story. Stripping out volatile fuel and food, so-called core prices climbed at a brisk rate of 6.5% year on year. That's up from 6.4% in the year through February. And we see this continuing to be a problem. Now, I think that if I were to take a guess and look in the crystal ball, I don't think that these inflation prices can go really too much higher. I think this might be the peak of what we're looking at on these consumer price index amounts. But if we look at the Bank of England's website, we see here current inflation rate down here at 6.2% in the UK. So this is happening all over the world. This is not just a US problem. Again, I think the US is a great catalyst and a good forecaster in future look forward of what we can expect to see. If we see these interest rates here, the current Bank of England rate is at 0.75%. If you've been looking at some of your savings accounts, you've probably gotten some email notifications saying your rate has gone up a little bit, but it's still under 1% for easy access savings rate. But this 6.2%, where they have this ridiculous target of 2%, so we're 4.2% over where we should be according to the Bank of England. And this is very crazy and it's quite scary. You can see here on the House of Commons library, they have some charts here about, where inflation is possibly going. Inflation forecast to peak near 9% in quarter 4 of 2022. So the UK seems to be a little bit trailing on what the US is experiencing right now. The reason why we want to look at this is because we need to really pay attention to what's happening in the financial markets and the stock markets to try to forecast where we're going to be in the future and protect ourselves. Again, timing the market, very, very difficult. But for those of you that like to try to do things like that, these are the numbers that you really need to be paying attention to. So here we go, February of 2022, we have a 6.2% inflation rate with the CPI, that's the Consumer Price Index. And then we can see some forecasts up here climbing under 10% and then dropping down as the government tries to fight this inflation with interest rate increases. Questionable whether that is actually going to happen or not. Now, on this news article, what's very, very interesting is that this analyst, his name is Michael Hartnett, he's the chief investment strategist for Bank of America, so some would say pretty knowledgeable. He thinks that cash could outperform bonds and stocks. So as interest rates start to rise with the Federal Reserve in the US and Bank of England start to put the interest rates up, people inherently will move from stocks and equities towards cash to try to protect themselves. And what happens when everybody starts selling stocks? Of course, the stock prices start to go down. And then hopefully inflation starts to come down. But the problem is right now we have this Ukraine situation. This is looking like that might go on for, God knows how long. And with that situation really presents kind of a curveball with this whole decrease of inflation plan. And then we have government spending money on, arming the people over in the Ukraine. That money, has to come from somewhere, that aid, of course, so more money has to be printed in order to pay for things like that. This is very interesting, though. In this article, it says Bank of America chief investment strategist Michael Hartness writes, inflation shock worsening, rate shock just beginning, recession, blah, 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 recession shock coming. He added that in this context, cash, volatility, commodities, and cryptocurrencies could outperform bonds and stocks, a typical precursor to an economic recession. So notice how he puts cryptocurrencies in there. And he's saying that anything with volatility, so commodities, things like energy stocks, oil stocks, cryptocurrency, I would probably throw gold in there, but it could outperform bonds and stocks. Obviously, he doesn't have the crystal ball to know whether it will or not. He just says could. Right. So we're also expecting a lot more interest rate hikes this year. To see how many. Some people are saying many, other people are saying few. We really don't know. Only the powers that be at the bank know what the answer to that question is. Let's see here. This is particularly bad for everybody who is residing in the UK right now, who is hurting over the energy prices. In this report here, under the Commons Library, it says another important driver of inflation is energy prices, with household energy tariffs increasing and petrol costs going up. In the year to January 2022, domestic gas prices increased by 28% and domestic electricity prices increased by 19%, due in part to a return of global gas demand as pandemic restrictions are lifted. And then also we have obviously the conflict situation, which is playing havoc too on those prices. On the 3rd of February, the regulator Ofgem announced the domestic energy price cap would increase from its current level of £1,277 per year to £1,971 per year. That's a 54% increase. As well as the military, political, and humanitarian impact of Russia's invasion, there will also be implications for the world economy. For the UK, most likely economic effects will come through higher energy prices. Oil and gas prices on the international markets have risen since the invasion. So really it just all boils down to kind of a complete mess of nobody knows when this is all going to come crashing down, but it will at some point. I mean, everything is pointing to some kind of big stock market correction and a recession. It could be global, could be targeted towards different parts of the world, like geographically the UK, the US, maybe some first world countries. Nobody really knows that. That's the big question mark, is when is this going to happen? But there's just so many news stories right now out there about the cost of living in the UK. It's just hard to ignore how much of an impact this is going to make on families who, don't have the financial cushion to pay 50% higher electricity, to pay higher costs of food, and food costs are going to go up. I expect food costs to go up, 20 to 30%, and that's going to really hurt people, which is, again, could possibly force us into recession. Just all of even the big issue is writing about this, and this is a big issue. From the big issue, let me click the cookies. There's the Queen. She's looking good on that picture. We've got possible tax increases. We've got national insurance increases. We got council tax increases. I talked about this before too, months and months ago, about increases in taxation. I think this is going to be one of the ways that these governments are going to fight this problem that they have, is they're going to have to put taxes up, try to get some money back from us to dig themselves out of the hole that this money printing hole has created. And that's going to happen in the form of taxation. You can already see it starting here, and this is just the beginning. So water bills are averaging a rise of 1.7%. A lateral flow test will no longer be free for everyone in England. And, you know, we could well see another CVID spike. I predict in the next month to 2 months we're going to see another spike in those cases coming up again. But again, more and more of these news articles coming out. Crazy, crazy, crazy. Let's look at this 8.5% rise in inflation in the U.S. Food prices continue to climb in March as farmers and grocers pass on rising costs for fertilizer, transportation, and other inputs in their supply chains. An index of food prices rose 8.8% in March. Again, the biggest annual increase since 1981. The price of beef, this is in the U.S., has gone up 16% from last year. Price of flour, 14.2%. Citrus fruits, 19.5%. And milk, increasing 13.3% gross. I don't know, milk. I don't know why people drink milk. That's another story. The overall price index was up 1% from the previous month. So really, really starting to soar. But what is very interesting on this story, here's a interesting graph here. You can see here fuel and oil up 70%. Airline ticket prices. I don't know if you tried to travel anywhere, but if you have, you probably noticed that the cost of a plane ticket has gone up. This is crazy. Used secondhand cars and trucks up 35%. Airline ticket prices up 23.6%. Doctor services are only up 0.7%, so that's good. There's a good chart on this New York Times story, which I've linked in the description if you want to take a read of it. If I can find it, here we go. This is the global inflation numbers here amid persistent pandemic disruptions and obvious military conflict. Germany plus 7.6%, Britain plus 6.2%, France 5.1% February, and Canada 5.7%. So you can see some of those first world nations struggling with inflation, and I think that will continue. Where is my chart? I had a good chart too. I don't know if it's in one of these other tabs, but it shows some of the inflation in other countries in the world. So again, we've got to pay attention to this because it's going to really affect the stock market at some point. That's what we are here to do, is try to watch what's going on with the global economy to try to protect, you know, what you maybe have in the market. Now, for your most basic investor, which I consider myself just a little bit step above that, you're probably just going to want to leave things alone. Don't try to time anything. But if you are into moving money around, this kind of stuff is very important. We have a problem in, obviously, you've heard about the news stories about what's going on in Shanghai, the lockdowns. This was a kind of a crazy video. Let's see if I play this. I don't know if you can hear this audio or not. Yeah, let me. This is people singing out of the windows in Shanghai because they're on the lockdown. That's not good, because what that is doing is creating more supply chain issues. That's going to create more supply chain issues because things are getting locked down again in China. Now we're going to have more shortages in goods and services that are being exported because people are not going to be able to go to work there to make all the stuff that the world is used to getting in China. So we see people, the Bank of America report also says that people are making less money and also saving more in cash. So they're preparing for something that's coming down the pipeline. So at least they're doing that. In the U.S., the Federal Reserve plans on a predictable wind down of its $9 trillion in asset holdings. And, we talked about this before. Who's going to buy those $9 trillion of bonds. That what they've done is printed money and gone to their trading desk in the Federal Reserve and purchased all of these assets that they're now going to have to hold long term because there's nobody out there that's going to buy them. So what they'll do is they'll let these bond coupons mature, and they plan on not rebuying them. It's going to put a real squeeze in certain ways on the economy, because in the U.S. what's going to happen, it's going to raise these interest rates up. They've already gone up about 2%. So a 30-year mortgage in the U.S. has gone up about 2%, which doesn't sound like a lot, but when you're going from 2.5% on a mortgage up to 4.5%, it starts to have a stranglehold on the housing market, because mortgages become more expensive. That's going to slow down that, which will have a knock-on effect. But the Fed has really just dug a massive hole for themselves, and who knows if they even plan on reducing this balance sheet. They may decide that they can't do that because they're too afraid of what a knock-on effect it's going to have on the economy. I don't know if they want to try to topple the stock market or not. Who knows about that, but we'll have to see. This is the inflation graph. This is pretty interesting, of all the countries that is going on right now. Look at this. Some of these inflation numbers. Turkey, 61%. And then we get down into the countries that we all know and love, 9.8% in Spain, 9.7% in the Netherlands. I mean, that number is crazy. It was previously 6.2. See the US at 8.5, European area 7.5, Germany at 7.3, Italy at 6.7, and then the UK at 6.2. So these numbers are really quite frightening. If we look at in Europe, see we got a lot of problems in Russia at the moment, and Belarus, their friends, and all of the European countries really showing some very, very high inflation. Except for our friends in Switzerland at 2.4%, they seem to be handling this well. But even Sweden at 4.3 is, I think, is high. You can see here the US 10-year Treasury yield. This thing has just jumped up a ton from one month ago. It was at 1.72%. Now 2.72%. So those rates just really starting to go up. We pay very much close attention to things like that, because the higher this 10-year U.S. Treasury yield goes, and the more money will come into these treasuries from retail investors, which means coming out of equities into treasuries. How high this is going to go, if you start to see this going over 3%, it's when you really start to be concerned about that possible stock market correction. One of the factors, obviously not the only thing. Let's take a look at the trading 212 portfolio. What a volatile week it's been. It was down to about 17,000 flat, and it's come all the way back up to 18,078. We made a pretty good buy with this Peabody Energy. This is the BTU trade, and I'll explain a little bit more about my thinking on this stock. But you can see up 13.49% today. What a big number that is. And then in the last week, up 17%, 26% in the last month. CleanSpark's just can't seem to get its act together because the crypto market is struggling at the moment. So you're very, very tied to the NASDAQ. Sentiment seems to be crypto follows the NASDAQ at the moment. Always going to be like, look at this Occidental, 109% increase. We've had a pretty good day on that, 2%, 6% in a week. Tulo finally looking in the green after we hung on for a long time, 5.45% today in the green. And then Laredo doing what Laredo does, up and down, up and down, up and down. But up 2% today. Yeah, so everything is kind of going in the right direction. You see the portfolio balance took a bit of a dip down here. We dropped some of the returns, had a bit of fall. And then look, we went all the way down down here to 16,005. So it's been a pretty volatile week. That's just in 1 week that we've gone from 16.5 all the way back to 17.486 what's invested. We're sitting on a bit of cash at the moment, £808. I was waiting for a bit of a pullback on this BTU stock, Peabody Energy, to put some more money in there. So what's going on with Peabody? Why that company? So Peabody is a coal company, and this is something I can't take credit for this trade. It was a kind of a collaboration with a friend of mine who we were talking about, what's going on with the stock market? When is this possibly all going to come to an end? And we identified some things that, maybe 1 or 2 trades that could happen before the end of this bull run. And this was one of them. Very interesting thing about Peabody is if you look at their last earnings report, and please, this is not financial advice, do not copy me here, just for your information. We had earnings February 10th, 2022 that beat the estimates by 1.79 EPS normalized actual, and the GAAP EPS beat by $2.59. So that's a big jump. So obviously double of what the estimates were. Now, this was prior to coal, the price of coal actually increasing. So if we look down here, February, and I think the price of coal is actually going to, let me do a 6-month shot. You look down here, February 10th, coal was at $189.50. So the price of coal is now at $320. So this earnings estimate for this company, they were able to beat these numbers back in February 2022. So the next earnings report that comes out, if you were just to think about it logically, you've seen this huge spike in coal prices that were as high as $439, right? And it's now had a pullback here to 320. But if we look at just where it was on February 10th, we can make a pretty good assumption that the next earnings report is going to be better than it was before. Obviously, there's more research that goes into that, but hence, opening up this position in the portfolio for Peabody Energy. And I've taken a pretty sizable position in this in another portfolio of mine. I'm possibly going to do some options, which I rarely ever do, but I think this one might be a good case for possibly buying some options on this. We've got this EU backing ban on Russian coal imports. So again, this is why you're going to see companies like Peabody do really well, and why you've got this jump at the moment, 13% today increase. The EU is going to become less reliant on Russian coal, going so far as to ban it. So the European Union agreed to ban coal imports from Russia in its first move targeting Moscow's crucial energy. The sanctions package will also include a ban on most Russian trucks and ships from entering the EU. Now, a big question is, when is this going to phase in? And there's talks of possibly August of 2022. But what it's going to have an effect on, and what it has had an effect on, you can see that announcement was made April 7th. So we were at 280. So coal has gone up $40. I think that's a ton, the way they price that. I hope I'm right about that. But yeah, you can see from April 7th, it's gone up about 8%. And I think it'll just continue to put a price squeeze on on coal. The prices because of this ban that's coming at some time. We're not quite sure when. So if you can identify a company like this that is a coal, company, a coal producer, then you can, sometimes really cash in on things like that. You can see some strong buy quant ratings down here. Wall Street thinks it's a buy. Momentum has got a lot of momentum. So we'll see how that one plays out. It certainly won't be a stock that is held very long term. That's probably going to be a couple of week to a month trade. This is the coal futures for the region of Asia. You can see again, coal was much higher, US dollars per ton, and dropped down. We had a big pullback, 416 down to 244, so had a big pullback. You see oil today, look at this oil, again breaching over 100 US dollars for crude, $104 for Brent, up 6% today. So the portfolio is really benefiting from holding these oil stocks, and hopefully will continue to do so. And again, this is the reason this portfolio exists, so number one, I can hopefully give some more money to charity. This portfolio does well, and just to show you how trading can be a pretty tense and scary. If it doesn't let you sleep at night, if you had a much bigger balance of this. Trading these stocks is definitely not for the faint-hearted, so I definitely don't recommend it if you don't have a lot of experience and research, time. Certainly don't follow along what I'm doing here, but I think it's kind of interesting to watch how the portfolio has done over the years. You can see we started down here. This is the historical start. I don't think we started with 56. I think we started with 5,500 or maybe 5,550 exactly back in October of 2020. And to see where we are today, it's pretty cool. This graph doesn't always give you an accurate representation because you can see these drops are when I pull money out, and then the graph obviously drops down. So, but you can see where we are today, 18,085. So really good results. Let's have a look at what's going on in the cryptocurrency market. If you were one of these people that said, Bitcoin's too expensive when it was 65 grand, I wish I had a point to buy in. Well, you've seen a 13% pullback. We've breached under 40,000 US dollars on Bitcoin. And right now, Ethereum is sitting a little bit under $3,000. I bought some Ethereum yesterday when it was, I think, $3,054. I think that's a interesting price point to be buying in, and I bought some more Bitcoin, as I tend to do every month. This is interesting article, how US banks are dipping their toes into the cryptocurrency market. This is a list of all of the major banks in the US and what they have done to introduce cryptocurrencies to their customers. Bank of New York Mellon announced in February of 2021 it would hold, transfer, and issue Bitcoin for asset management clients. So that's usually people, they've considered to be wealthier clients, but people are asking for it, their customers, so that's a pretty big bank. US Bank Corp went live in October of 2021 with a Bitcoin custody service. The services are geared towards institutional investment managers with private funds. Deutsche Bank quietly revealed plans to develop a service to hold and trade cryptocurrencies for institutional investors in a 2020 report. And it had already completed a proof of concept. We've got wealth management companies. JP Morgan allowed its financial advisors to accept buy and sell orders for 5 cryptocurrency products. Wells Fargo began offering crypto to its wealthy clients in summer of 2021. Citigroup has a unit, wealth management unit, created to facilitate investments in cryptocurrencies in June of 2021. And stable coins, NFTs, and central bank digital currencies. And then March of 2022, regulatory documents reveal that Goldman Sachs is offering wealthy clients access to an Ethereum fund through cryptocurrency Galaxy Digital. And then we have a slew of other examples of how major banks are starting to really dip their toes into the cryptocurrency market. We have 12 companies that have close to $700 million in Ethereum in their treasury. So that means on their balance sheet, companies are actually starting to hold Ethereum now. You can see here, cryptotreasuries.org, if you want to look at this yourself. See these companies and how much they hold and what the value of that is. And this is very, very early on. Galaxy Digital, we got Coinbase, Hive, Neptune Digital Assets. See, some are smaller than others, but then this is why I think I'm starting to change my mind a little bit about Ethereum. I thought, Ethereum is just this speculative cryptocurrency, but there's so much that's being developed and used now on Ethereum. You just really can't ignore it anymore. If you look at all these different things that are running on the Ethereum network, Ethereum is people that are running mining nodes are getting paid off of this. We've got Trust Wallet, D-Bank, DeFi Pulse, 1inch, Alchemy. There's all these exchanges, Sushi Swap, OpenSea. This is where all the NFTs, one of the biggest NFT platforms. You got Yearn Finance, Chainlink. There's just so many things that are running off Ethereum now. It's hard to really ignore it as a not such a speculative investment. If you've heard of the Bored Ape Yacht Club hype, this has been going around, all of these pictures of these apes off of OpenSea. OpenSea, you cannot purchase any of these NFTs without using Ethereum, so the Ethereum network is heavily involved. Oh, by the way, I went to the petrol station today. I'm filling up my car, and some of the petrol stations have TV screens. When you're putting your petrol in your car, it's playing an ad or playing a news story. And there was a news story being played at the Shell station for this Bored Ape Yacht Club. So mainstream now. Some of these prices have gotten ridiculous. I don't know if you can see this, but see that some of the last sales, 119 Ethereum. So we're talking about $300 plus $1,000 for a picture of an ape. You can see 140 Ethereum here. But again, Ethereum has to be used to facilitate these NFT sales and purchases. And then you can even buy a picture of Dennis Rodman's head right here if you wanted to for 0.13 Ethereum, so about $330 US. You can get yourself a nice little picture of Dennis Rodman, the basketball player. For anybody that's a basketball fan like I was back in the 1990s, the Chicago Bulls, Dennis Rodman has his own NFT collection. This is a list of the Bitcoin treasuries. So these are companies that actually hold Bitcoin, and also countries that hold Bitcoin on their balance sheet. Very interesting list here. You've got MicroStrategy, Mr. Michael Saylor, with 125,000 Bitcoin. And then countries right now that are holding Bitcoin on their own balance sheet. You've got Ukraine, Bulgaria. Bulgaria is holding $8.4 billion of Bitcoin on its balance sheet. And then the Ukraine, 1.8 billion, El Salvador, 377 million, Finland, and Georgia. So a growing list of companies now that are holding it. And then you've got private companies that own Bitcoin. The Luna Foundation, of course, is 1.1 billion. And they continue to buy more and more Bitcoin. Then we got ETFs here that continue to own Bitcoin, with Grayscale, the biggest, 643,000 Bitcoin. And this will continue to grow as we see more and more companies adding to their ETFs as they're allowed to do. Let's see. I think this is the same list. Bitcoin treasuries. This is the guy from Luna that's just purchased another 230 million Bitcoins to hold on its treasury sheet for Luna. That's another cryptocurrency project. And that is going to be a backing for their Luna stablecoin, the USDT. So he continues to buy, and he's planning on buying more and more for that. This was a tweet. This is Bitcoin has tended to move in the same direction as the NASDAQ 100 index. It's becoming more and more correlated. Pretty interesting. And then the NASDAQ article came out. This is a NASDAQ report. The spot crypto ETF is in demand. What that is, right now in the US, other countries, they do offer spot crypto ETFs. That's an exchange traded fund, similar to something you could buy like on Vanguard. We talk about Vanguard's index trackers. You could buy that in an ETF. Well, what they've been trying to do in the US is to allow companies like Fidelity, possibly Vanguard, don't know that for a fact. These big companies, particularly Fidelity, has been trying to get a spot crypto ETF pushed through the SEC, and it's continuously been denied. And this is why the SEC has rejected Fidelity's request. It said the SEC rejected the Wise Origin Bitcoin Trust because of the concerns that the exchange on what it would have been listed didn't have the proper precautions in place to prevent fraud and protect investors. Unlike other Bitcoin ETFs that the SEC has approved, which deal in Bitcoin futures that expire each month, Fidelity's proposed ETF would have directly held the cryptocurrency. This is a big deal because once the SEC thumbs up these spot Bitcoin ETFs, which I have no doubt that they will, it may not be in 2022, I'm thinking likely in 2023. What will happen is Fidelity will open up an ETF, and then they'll have to buy the actual physical Bitcoin or digital Bitcoin to hold within the fund. And then, a lot of financial advisors are saying, and if we look at this report right here, according to a new NASDAQ survey of 500 financial advisors who are currently or considering allocating to crypto, 72% of advisors would be more likely to invest client assets into crypto if a spot ETF product were offered in the US. Among advisors already investing in crypto, 86% expect to increase their allocations over the next 12 months, while 0% report plans to decrease their allocations. Of the same group, 50% are already using Bitcoin future ETFs. 28% plan to start using them in the next 12 months. Despite strong interest in passive approach to crypto investing, so we talk about passive investing in index funds, the surveyed advisors are not confident that such a product will be approved in 2022. Only 38% find it likely, and 31% find it unlikely, and 24% likely nor unlikely, 7% are not sure. So this is going to happen eventually. I'm 90% sure that you'll see a Bitcoin spot ETF in the US, and once that happens, I think you see the Bitcoin price just explode, because that's going to give it the validity that I think a lot of people, especially financial advisors, are looking for at the moment. And futures ETFs are not really something that a lot of people are comfortable investing in, because they can be highly volatile. I mean, you're betting on the price of something a month down the road. It's just very hard to do. Nobody really knows. So a spot ETF, when it comes into fruition, is going to be a really big deal. And the question is, how much do you believe in something like that? I think it's almost certain. And how this is going to affect this 39,000 dollar price range. And I've read reports from people that are really study, cryptocurrencies, and they make these price predictions who I don't know whether that will come true or not, but I've seen some pretty important players in the business saying that in 10 years they would be shocked if Bitcoin didn't hit around between 500,000, 800,000 US dollars. So people will be looking at this price now going, wow, that was a hell of a buying point at 39,000. If the thing gets to 800 grand, 20x your money. So just something to think about. Anyway, that's what I got for you today. I hope you enjoyed it. If you can hit the thumbs up if you can. If you haven't subscribed, subscribe. See if you have any interesting questions. Let me take a quick drink. Hi, Akichak. Welcome to the stream. Patty says, what is holding up my portfolio with trading 212 at the moment on my stocks and oil and the dollar? It's touch and go whether I cash out and put the proceeds into LoanPad with my existing fund. Got to get yourself a crystal ball. I don't know what the outcome is going to be. I can tell you if there's a recession, gold is probably going to perform well. Mike says, China remains the elephant in the room. If the COVID situation gets worse, then this will feed across into an economic downturn. Yeah, one other thing too, I know in the US there's a airline mandate for using masks on the plane, and that is supposedly being removed in 6 days on the 18th of April. So, I mean, you would expect that you would see a rise in the vid, but we'll see. Yeah, lots of comments about heating. What's your view, Lawrence? Are you going to cash out on your stocks pro-tem? Pro-tem? I don't know what that means, pro-tem, Patty. But yeah, eventually I think I'll probably end up, at least on these trading accounts. I plan on leaving the index trackers alone because I think trying to time the market with the majority of your investments is very difficult. Depends what your risk tolerance is. I've never gotten it quite right. I don't trust myself to get it right. But with these trading accounts, so I've got, I think 60% of my money in index trackers, and then I'm trading about 40%. Probably majority of the 40% will end up going to cash at some point if I start to see things looking really rocky in the markets. Yeah, I think cash will be certainly king there. What do you think about purchasing crypto from PayPal? Yeah, I don't think it's a good idea. Just the reason being is that if you can buy the actual crypto, the actual Bitcoin, buy it and then hold it yourself. I get that they're going to offer, well, I don't know if they offer a guarantee if you say so. I believe you, but if you don't own the actual Bitcoin, then I want to be able to move it if I needed to. In case of some dire emergency, you'd want to be able to get your cryptocurrency and do what you want with it. I mean, we've seen examples of countries locking things down, and I certainly would prefer not to have cryptocurrency in a company like PayPal where I know I can't move it, or Robinhood, or some of the, at least in Coinbase or Binance, you can actually move the crypto out of there if you need to. But these other companies, no. It is easy though. You're right, Dave. It's a very, very easy way to buy. If you don't want to go through the hassles of buying it through an exchange like Coinbase, which I don't think is that hard. If you watch my tutorial, you'll be able to do it pretty easily. But they do limit the types of cryptos you can buy. You don't have access to other ones. A lot of PayPal, I think it just says Bitcoin, Ethereum, and Litecoin. So pro term is momentarily. Okay. Momentarily, I would say I'd be looking within the next 3 months, Patty, that 3 to 6 months probably go into a good portion of cash. It just depends. You got to watch all this stuff go on. It's such a balancing act at the moment. But yeah, I don't foresee being so invested into commodities and oil for the long term. But that may change. Things change, every day. So yeah. Anyway, we're gonna end it here. Hope you enjoyed the information. Yeah, nothing really much else to say. I hope everybody has a great Wednesday, and come back on Thursday for some peer-to-peer lending goodies. And we'll see you next time. Hope you enjoyed the stream. Have a great night, and we'll see you on Thursday. Take care.